Now, one of the last payments which is chargeable under the head Profits and Gains of Business and Profession is sum received, I'm just reading it out, sum received on account of demolition or destruction of any capital asset other than goodwill or financial instrument wherein capital expenditure incurred thereon has been allowed as a deduction under section 35AD. Now what happens is that section 35AD provides for deduction, an accelerated deduction for capital expenditure incurred for R&D work. So what happens is, suppose I bought a machinery which was to be used for 35AD purposes for 5 lakh. You will learn that normally on a capital asset you are entitled to depreciation and there are rates. So it says only 20% of 5 lakh is allowed as a deduction. But in order to promote R&D work, what the government says is that where you are using this plant and machinery for research and development purposes, we will give you a deduction for this entire amount in computing your income of the first year. So what will happen is you will prepare your profit and loss account, you will book your income, say let's say 10 lakh, and you'll book 5 as the entire expenditure. So this entire capital expenditure is allowed as a deduction and only the balance is taxed. This is for tax purposes. Now what happens is, suppose after I had claimed this deduction, this machinery was destroyed or this was demolished. And what happened was that I had taken an insurance on this machinery. The insurance company suppose gave me 2 lakh rupees. Then this 2 lakh rupees that I have received during the current year on account of demolition or destruction of a capital asset. So it has to be a capital asset other than goodwill or financial instrument, which was allowed as a deduction. This amount is liable to tax as income of profits and gains of business and profession. So you will include this 200,000 as your income in the year when you receive it.